Let's quickly also go back to some of the sectors that we are tracking. IT, realty, banking sector continue to be on radar.
Yes, Shweta. So, as far as sectoral indices are concerned, it was a sea of green. All sectors pretty much on NSE ended today's trade in the green. Let's first talk about the Nifty banking pack. It's been a relative laggard in 2023. However, since November, it has outperformed Nifty. Nifty is up about 2.8 to 2.9%. Nifty Bank, on the other hand, is up 3.5%. Even in today's trade, we have rescaled that 44,000 mark for the first time in nearly a month and a half, and even managed to close significantly above it at 44,200 levels. So even if you look at the results from the banking pack, they have been great. Provisions have come down, which of course is a curious case, but overall, as far as net interest income, which was expected to take a hit because of ICRR and a high interest environment, was not hit as much as the street was expecting. So overall the results were good, and now we are seeing some sort of a movement in both private banks as well as your public sector banks. And a word on private banks, HDFC Bank today in today's trade ended almost 1% higher. Other your private sector banks also performed fairly well. So finally we are seeing some sort of a performance pick up in those private sector banks as well.
All right, so NIMs have been good, results have been good, and Nifty Bank there continuing to not underperform, at least be in some semblance with the markets.
Yes. Another sector that I think we need to talk about, another laggard, so to say, was the IT pack. Nifty IT rallied almost, I think, over 2% in today's trade. It was among the best performing sectors. Nifty IT was up 2.6%. Now, this again was on the back of the recent alleviation in concerns about inflation. As I mentioned, that inflation print in US for the month of October came in lower than expected. Now, this again reaffirms the thought that Federal Reserve might not go for another rate hike. Now, as we know, IT sector is highly exposed to the US markets. So if there is a high interest rate regime in the US, the cost of borrowing for American businesses would be high. So perhaps they would not focus much on discretionary spending and rather focus on their core businesses. Now, with the expectation that interest rates are expected to go down in the perhaps by the second quarter of by FY25, the discretionary spending is expected to pick up again. And given the correction that we have seen in some of these IT stocks, Shweta, I think the valuations are also looking reasonable. At least that's what I'm picking up from the experts that we have been talking here.
All right, may not be a washout here after all.
I mean, I don't know if if
there's going to be an
demand
immediate
will
impact
come back right away, but 2025 at least so far looks secure.
All right, 2025 looks secure. Let's talk about metals. There's been a news trigger this morning by the way of government opening up bidding for rare minerals. The block auction will perhaps start in next 2 weeks. That has had a positive impact largely on the metal pack.
That and also a softening in the dollar index. There is an inverse. I mean, the relationship, generally speaking, is very complex between dollar and the commodity prices, but in simple economics terms, there is an inverse relationship between commodity prices and your dollar index. So whenever there is a correction in dollar, whenever the US dollar weakens, we see a run up in commodity price, and that's what played out. I mean, the dollar index slipped to a 2-month low in yesterday's trade, and it's around 104 sort of levels. So this has, and given the fact that most commodities are priced in dollars, buying these commodities becomes more expensive. So that's why we are seeing a good bit of a run up in metal pack. I'm also reading reports that perhaps China could go for a big stimulus package. So demand could pick up from there, and as we know, they are the biggest consumers of metal. So perhaps that's also leading to some bit of a rally in the metal pack.
All right, and all major metals companies there, Hindalco up 3.72%, Tata Steel 2.56%, and the Jindal Steel up at 1.77%. That of course is the metal pack, but realty also continues to be an outperformer. A story I think has baffled a lot of people. What's happening with the real estate sector there? There's of course higher demand. There is a premium that people are ready to pay to own more than one property, but realty stocks on a rally for a while now.
What a rally that too, Shweta. I mean, Nifty realty year to date is up almost 56% or so. I think on NSE it is the best performing sector so far this year. And let's talk about today's run. I think one of the reasons why Nifty realty saw another 2% rally in today's trade was on the back of a softer inflation print for India. So what these sectors are very rate sensitive. So perhaps RBI going for a rate cut in the near future would bode well for the mortgage prices, as that would perhaps go augur well for the demand also. Also, there is a pent up demand for the housing sector. The housing sector is seeing some sort of a structural revival. It's moving from unorganized to organized, and which is benefiting these larger players, which are able to increase their market share. So all in all, things are looking really positive for the
consolidation in the real estate market.
Of course, and as we were talking about affordable housing as well as premium housing prices going up. I think 20-25%. The ANAROG report suggesting not very long ago
for both premium as well as affordable. So prices going up across the spectrum,
and that's in cities which thereby were declared as ghost towns of India. I'm talking about Noida, and the report from Wall Street Journal, which suggested that the housing demand is not there, while supply has exceeded the current supply. But that we are seeing a complete reversal in the last couple of years.
Absolutely reversal in that trend.